Hey everybody, it's Pete. Good morning. How are you? Thanks so much for joining me on today's episode of Stocks for Breakfast. We have a lot to talk about today. In today's video, we're going to talk about the top two earnings that have been the biggest movers on Wall Street right now. We're going to obviously talk about Tesla earnings today. We're going to analyze Tesla stock. We're also going to do a little bit of a recap on Netflix yesterday. If you remember what we spoke about yesterday, Netflix reported yesterday afternoon. There was a lot of back and forth in the price action. But I actually have a special treat for you today. We're actually going to go behind the scenes a little bit today. And we had a good question from a new member in the boot camp yesterday, which was, and I want to keep bringing these kind of insights into you. Every single night, I post a list of stocks that are that meet certain criteria that are strong across multiple timeframes. And there's a little bit more to it than that because of the algorithm. But then I also produce my trading game plan, which is my final list of stocks that I end up trading for that day. So it's going to be kind of fun. So if you stick around probably like 5 minutes from now, I want to do a deep dive and explain the difference between the two, because we spend a lot of time saying the more angles you hit the scans from, the better job you do of game planning, the easier it is for when the market opens. And it doesn't matter if you're day trading or swing trading, because all of that happens prior to the market opening. So the better job you do of putting that list together, the easier trading is. I know using that word easy in trading, a lot of people might not be on that camp, but trust me, the trading part of it is easy. It's the prep work and the mindset that a lot of people just need a little bit extra help with. So stick around, we'll be right back. We have a lot to cover today, and obviously we're gonna get right into Tesla first. So be back in just 1 second. Okay, so first I want to thank everybody for joining me today. I really appreciate that you've chosen to be here with me. We got a lot of stock picks we're going to talk about today. Everything we do is for educational purposes. It's my mission to help you make better decisions. So the final decision is up to you. I just want to say hello to a couple of people. Let's see. Don having some problems with his software. Always restart your computer. That's the technical, that's the way most people give you advice, right? Let's see. Hey, Barry Cannon. Good morning. Nice picture there with you and your wife. John Weinberg, always a pleasure. How's it going, buddy? Let's see. Myers, good morning. Good morning. Jason Miller, what's going on, pal? How's work? Let's see. Laurel, would love to know your thoughts on FCEL. All right, Laurel, if we have some time, we'll take a look at that today. Morning, Sal Friga. Thanks for all you do. I'm learning a lot from these videos. You know what, Sal? I appreciate you being here. The more interaction we get, the more pumped I get to do the video. So thanks so much for being here with us today. So obviously, we're going to talk about Tesla today. We're actually going to start out with Tesla. So I'm actually going to kind of go off the screen here a little bit, and we're going to jump into some of the news for the day. First, we're going to talk about stock futures and what's going on. Obviously, there is a massive list of stocks reporting earnings today, Tesla being amongst the biggest ones, Las Vegas Sands in there as well, Discover Financial Services, a bunch of them. What else is in there today? Lam Research is another one. Big tech, Verizon is in there today. And the futures are kind of dancing around, but let's not talk about what the futures are doing now. Let's actually talk about what the market has done for the last week. And I want to come back in here, and this is a really big part of trading that I think probably not enough people discuss. And this is not the stuff you find in trading books. This is not the stuff you're going to find, there are certain periods of time, and let's just say it what it is, right? So let's actually zoom this chart out, and you can see that 5 weeks of the market going to the downside. And we spent a lot of time, and I'm talking to you right now. We spent a lot of time about reducing position size, being a lot pickier, preserving precious capital in exchange for, if you did that properly and went a little bit more stock specific, you didn't dig yourself a hole and you were kind of okay. Maybe some small losses, some small profits. Then we talked about the conditions where we noticed a big head and shoulders top over here. And we said most times in a longer term bull market, the first time a head and shoulders top forms, that's technically a bearish pattern where you expect a reversal from a bull to a bear. But we also said if that's in the middle of a raging bull market, the first one typically fails. We saw that. So two things here. Number one is if you did a good job of managing your risk, respecting risk during that 5 week period when the market was tough, challenging, bearish, whatever name you want to put on top of it, you should have been in really good shape during that 5-week pullback because you were smart. You were acting like the smart money. Now, the opposite of that is the last 5 days. And I want to get to this, maybe even the last week and a half. Okay. The SPY ETF has now produced 3 bullish gaps in the last 4 days. And the one day that was not a bullish gap, which is this day right here, was a lower opening that turned into it just turned right back to the top into a bullish engulfing candle. 3 bullish gaps and a bullish engulfing candle in 4 days. So here's the point that I want to make. And I tell you every day, I am going to challenge you like I am in your ear. When the market's tough, you have to be smart. When the market's obvious, you have to be aggressive. And when I say aggressive, I don't necessarily mean buying bottoms or any of that kind of garbage. I am talking about when your stocks are doing what they're supposed to, when the sectors are doing what they're supposed to. Obviously, we'll get into sector rotation when it looks like this and everything is lit up green and lit up green for a week, okay? When that is happening, it's your responsibility to step up and make more on your winning trades. So for as tough as that 5-week period was, I need you right now to go into your trading journal. And we talk about this every day. Ask, did you trade well? Did you hold longer? Did you add to good positions? Did you recognize sector rotation, which again, we've been talking about technology stocks lighting it up. Did you make more so that combining the last 6 weeks, you got to net profitability, or did you just dig out of a hole because you overtraded when you were bored? These are the kind of ninja things that you need to learn if you want to see your account grow like this. I just can't explain this enough. So many people think the market opens, I have to do something. No, the market opens, you have to do something if there's good opportunity, if there's A+ trades. That's the difference between somebody who's struggling, knows everything, but can't make a dime versus somebody who is smart during those 5 weeks of selling, picking your spots, a lot more stock specific, making a little, losing a little, maybe even making a little bit more. But then when the market turns around, does exactly what we expect to do, you need to make money. I can't stress this enough. I'm the first person that says, all right, don't worry about it. Don't worry about it. But if that thing turns around like it has the last week and a half, you should have made more. There was more on the table. Now, obviously, more is relatively different for everybody, but I'm challenging you now to start out today's call. Did you make what you were supposed to during that 6-week period? I just wanted to throw that out there. All right. First, though, I want to say hello to, where was it? I just saw it. Jennifer. Where are you, Jennifer? Oh, there you are. Jennifer, good morning. I want to make sure I get in there and say hello to everybody. Joseph, thank you so much. I really appreciate that, Joseph. Sean Jacoby, that's a new name for us. Let's see. Twitsy D. Twitst. Yep, we're taking a look at CHPT. They seem to be a little bit of a stock on fire right now. At least it's getting a lot of good press. We're going to talk about that. CHPT is charge point, and they're actually getting a lot of good press right now because as the EV market is starting to explode, which obviously we're going to get to Tesla right now, somebody needs to be charging all of those cars, and CHPT seems to be at the top of that list right now. Let's see. Matt saying I'm a bit too impulsive on the market open. Definitely need to be more patient. You know what? Yes, and Andre, we're actually going to talk about Tilray in a second as well, but I want to stick here with Matt, and I promise we're going to go right into Tesla right after this. Okay. Matt, I want to challenge you and for everybody on the call right now. One of the biggest things that newer traders or traders who don't have the experience of trading on a trading floor like I had in New York City, sometimes you don't know the deeper insights. And a lot of traders are afraid to trade the open because they feel that the open is too volatile, for lack of a better way of putting it. And the market opens, stocks are all over the place, and I either make a lot of money or lose a lot of money as soon as the market opens. Hey, Solomon's here. When you see the market open, you should know exactly what you plan to do prior to the market opening. And I'm going to give you a big clue on how to know that. I'm actually going to pull up the charts again. Based on how the market and your stock closed yesterday, based on how your stock traded the last 3 to 5 days, especially the last 2 days, should help you script how you plan to trade the open. Now, what I mean by this, and obviously I teach this in a lot more detail in the boot camp, you need to understand, what do you expect to have happen the first 90 minutes of the day? So here's the thing, and this is getting into what Matt is saying here about being impulsive. There's no reason to be impulsive if what you planned is not unfolding. So if you say that I'm looking at XYZ stock, well, we'll use Tilray, for example, because a couple of people are taking a look, and then I promise we'll go right into Tesla. When you see a stock like this, and Tilray actually had news, we'll pop up the news here so everybody can see. So they actually hired somebody from Bacardi, general manager, joined for their Canadian growth strategy. The stock and the market love that news. 15, almost 16% yesterday. So now you have to say to yourself, what am I expecting to have happen in Tilray today? If that does happen, how do I plan to trade it? So that kind of removes all of the impulsiveness out of any trade, never mind trading the open, because if we're looking for Tilray to open higher and then within that first 90 minutes trade higher off of that news from yesterday, which was also met by big volume, you get in there and you trade confidently. If Tilray opens higher, which right now it's basically flat, which means it's opening up at the same price. If it opens and pushes lower and never recovers from yesterday's high or yesterday's close, you just sit back. So Matt, do you see how there's really no impulsivity to it at all? If what you expect to have happen happens, then you trade. If what you expect to have happen does not unfold, you simply sit back and you're like, okay, not right now. That's what professional trading is. You are not trading for the sake of trading. And Matt, I don't know you, so I'm not saying you in general. I'm just talking about how most inexperienced traders that, they hear ding, 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 the market opens and they feel like they have to do something. Professionals are already scripted out. We already have, on our legal pad exactly what we're expecting to. So let's hop on over. Matt, hopefully that helps you a little bit. All right. So we're actually going to hop on over to Tesla, because obviously Tesla is the big dog right now. Tesla is the one that everybody is waiting on. You can see how hard we've been working Tesla. We've actually, if you remember, about 2 months ago, we actually had this, as we were slowly grinding up here, we had this level for Tesla as our first target. And you can see that we actually hit it yesterday, traded into a bearish U-turn, meaning it traded above, came back and pushed down. This area right here is the biggest thing that I'm going to be looking for. So if we take a look at Tesla and what to expect, and remember, we did this in for Netflix yesterday as well, right? Analysts adjust EPS of 164 versus 76 in the quarter from a year ago. So obviously a little bit better, right? But this is the big thing. Whether you're watching NIO, XPEV, LI, Ford, GM, or especially Tesla, which, by the way, that's a tip. You need to have all 5 of those, if not more. You could even put LCID, Lucid, in that list. Make sure you have a game plan with that. And don't forget, I'm going to show you behind the scenes in a minute. Deliveries year over year are the big number. Now, the question is not what they delivered last year. It's what do they expect to go forward. So remember, everything that we're talking about in earnings is based on, okay, that's great from a year ago. That's awesome. That's how the stock ended up where it is right now. You have your revenue, you have your margins, you have your free cash flow. Then you take the percentages of all of those. Did your margins increase? So the top line revenue is important. The deliveries are important. But how did that affect the free cash flow that the company actually has left over after that? A lot of news coming out of China right now, where Tesla is now, their China factories are their largest producers right now, and that is just starting to expand. So if we put all of those pieces together, year over year was great, but now they're talking about expansion in other countries. That's a big deal. Based on what we saw in the charts over here and what we're talking about, the EPS numbers, this right here, where we pushed up and paused and consolidated, pushed up and paused and consolidated, the way I'm looking at it right now and the numbers I'm looking at, and remember, scripting it out and the actual outcome of how it unfolds, 2 different things. Remember, you need, if this happens, then I'm doing this. If this happens, then I'm not doing this, right? So the way I'm looking at it right now, I actually think Tesla has further upside based on the expansion. Because remember, we're looking at the guidance. We're looking at what happens forward. And in the expanding markets that it's in right now and the giant market share that they have, and quite honestly, first mover advantage, I see further upside. And that's the way I'm going to be looking at it and approaching it, which is a little bit different from what we talked about in Netflix yesterday. If you remember looking at Netflix, we actually said that Netflix was going to have a hard time beating last year's numbers and exceeding them. And a lot of companies like that are having that problem, that with the recovery, the anti-recovery stocks, the pandemic stocks such as Zoom and Wayfair and Etsy. Although Etsy we could take a look at in a second. Etsy's actually been bouncing a little bit recently as well. If you remember and go back and watch yesterday's video, we said that we thought it was going to be a hard time for Netflix to not only match last year's numbers, but then exceed them. Because remember, there's the numbers that got you. Everybody was talking about Squid Game yesterday. Squid Game was priced in. Squid Game just came out. That was not going to affect the Netflix numbers yesterday. If you were saying that, you're not in the context of investing versus that being already priced in. So as you can see now, Netflix is actually down $11.40. The numbers are still being absorbed, but we get a lot of questions about how do I trade this as soon as it comes out. We got a good question from Don Maxwell in our community the other day. Should I hold it into earnings? And we had a whole strategy that we discussed on our coaching call the other day. And I gave him reasons not to at the position that he was in at that moment. But I want to make sure that I'm kind of really bringing this home for you, that earnings is so much more than, oh my God, EPS beat, I have to buy the stock. There's so much more that goes into that. And especially as somebody who's been an entrepreneur since 1988, that operating profit margin means so much more. And the percentage of change in that operating profit margin. And remember, we've had a lot of conversations recently here on these calls where each industry type has different operating drivers that matter when you see the earnings. So for Netflix, the big difference, and they actually had a little bit of other news as well, which is their reaction to the Chappelle show and a couple of other things. But that's not affecting the stock price. The stock price is taking a hit because they're competing with pandemic numbers. If we work our way over into Wayfair, Wayfair has not been able to recover. Zoom may be coming off the floor a little bit. ZM, maybe. We've got a couple of questions about Zoom recently. We're also going to spend a couple of minutes on Chinese stocks in general. Seems like the veil has been lifted a little bit there, at least in the short term. But Etsy's a little bit different story. Etsy seems to be a little bit more of a company that's looking better going forward. We keep looking at this 221 level for Etsy, and now is finally punched above that level and now is pausing, and we're looking for it to stay above that level. So as long as Etsy, I get asked all the time, give me levels, give me prices. As long as Etsy's above 221, it's still interesting to me, not only because it's clearing a level where sellers kept shoving it down, but this is just as important because now there's room to go. That's a big thing. You know, we get questions all the time. Well, if it's down here, let me zoom that out a little bit. If it's over here and you like it over 221, why don't you buy it now before it gets up there? There's two ways to handle that. Number one is I don't want to buy full position size into a level where sellers keep coming in and smashing it down. So maybe if I get involved prior to that, it would be smaller position size looking for feedback. Does it finally get through there? And then we have certain parameters where we can add to that position. So remember, our job, spot what smart money is doing, read the tape, and then determine how fast do we want to get to our full share size position. Is everything perfect? Is the sun shining down? Is it lighting up your enter key? Everything's an A+ trade. You get in there a little more aggressively on your first entry. Or do we look at something, let's talk about those Chinese stocks, like let's say Baba, for example, and it's starting to wake up. Do you go in with full share size, or are you fighting these couple of months, almost 4 months of selling, maybe even a little bit longer than that? How do you get to your full share size? And in this case, because we're fighting that longer term order flow, because in this case, the smart money is just starting to size up just a little bit, we should be mimicking and piggybacking what the smart money is doing and start to size up with them in that same scale type fashion. If you don't really remember, or if you happen to not know my background, when I had my trading office in New York City in 2007, the floor of the New York Stock Exchange completely changed when they went from the super dot system where the specialists were in control of most of the orders on the floor of the New York Stock Exchange to what's known as the hybrid system. So they got hit with a lot more electronic orders. A lot of those people came off the floor. That's how ICE came into, and the company called ICE that is now owns all of those. But what ended up happening was on my floor in New York City, we actually ended up having 25 former New York Stock Exchange specialists, clerks, and brokers come and trade in my office. At that time, I was a heavy NASDAQ trader. They were in New York. They taught us order flow. We taught them tape reading, again, which is obviously where we came up with the 3 pillars right? Stacking the order flow, tape reading, and risk reversal. My point is this. The single biggest lesson that those guys taught everybody on my floor in New York City, which we had about 60 people in the office, but 300 traders in total, was understanding that smart money does not just go in and start buying millions of shares at the same. And this is when you're talking about 14 years ago, okay? Obviously, a lot of this is done more in 100 share increments, all algorithm and stuff, but it's the same exact process. They start building a position based on shareholder value of where they think it's going to be now compared to where it's going to be and how fast the market is going to catch up with. If this company has a competitive advantage, how long do we expect for that shareholder value to catch up with the price? Where do we expect the price to be in the future? So they start building a position between earnings reports for a longer term move. So if that's how the smart money builds those positions, and it's our job to recognize how the smart money is working their positions, I got to be honest with you, that makes trading a lot easier, doesn't it? It kind of makes sense, doesn't it? That if they're building positions, why in the world would we think that we're just going to go in with our full share size, perfectly time the entry, and never have it move against us? It's just silly town, quite honestly. So when you're mimicking, piggybacking, and following the way the smart money buys and sells millions and millions of shares, you're literally doing it the way the same people who are making stocks go up and down. That's real trading. That's not show me the chart pattern. That's not show me the bull flag. Do you prefer a 10-period simple moving average versus a 10-period exponential moving average? None of that matters if you're in the wrong ideas. None of that matters if you're not working your positions smartly. So if we go back to what we just talked about before, and I'm getting all pumped up now. I'm on my second cup of coffee. All right. If you did what we talked about during that 5 weeks of selling, and you were smart, and you were paying attention, and you were preserving precious capital, when the market just lit up, there was plenty of opportunities. And probably the top two stocks that have offered the most opportunity, AFRM over that same time period, and obviously NET, which took a little bit of a break. But if we go a little bit deeper and we start to pay attention to sector rotation, we also know that all of the energy stocks were on fire for about 5 or 6 weeks, and they were easier to trade while the market was coming down, which that's why it's so important. And again, this is really where I'm going to do a deep dive now. I'm actually excited to show you this. When you're doing sector rotation, like we teach you to do every day, like we're walking you through that I do every day, and I'm going to take that a step further and deeper right now, even while the market was pulling back, we were tracking the smart money and say, where are they right now? I wasn't bottom fishing. I wasn't looking for something that got smashed and looking for a spot for it to miraculously pop up. That same 5 weeks that the market was going down, we've been talking about energy stocks for that entire 5 weeks. Now the energy stocks have paused for about 10 days. We're tracking the order flow. We're moving over into technology stocks, consumer services stocks. Industrials perked up a little bit, but didn't become trades. And we've been talking about basic material stocks. This is trading. This is not chart reading. This is a big difference. Chart readers look for patterns. Traders are looking for money. We are piggybacking after we spot what the smart money is doing. Now, I trust me when I tell you this. What I'm about to show you is going to be something that could potentially change everything you do. How's that for a pause? A dramatic pause. All right. So I want to show you, we got a good question last night from one of our members, which is every day I post the game plan versus stocks that are strong, which is a part of tracking the order flow. So you're probably going to want to snapshot this. And I'm giving you a sneak peek behind something that I normally do. So consider this a bonus today, okay? Because normally we'll go over a whole bunch of stocks, but I want to teach you something today that's really important. And it was a great question. What's the difference between the top stocks list that I create for our community every day versus the game plan stocks that I give to the community every day? So if you don't know, I do my game planning after the market closes. Trust me, if you're here from the beginning of this call, this is going to be worth it, okay? What's the difference between the top stocks and the stocks? Now, I give everybody my game plan, then I do a video, and then we have another meeting in the morning. So if you're in the boot camp, you know all of that, right? So here's what I want to show you, okay? Let me pull this up on the screen. So this is the list of stocks that I gave to our community last night. So consider this a giant bonus for today, okay? This is the list from last night. Now, there's several things to look at. You can see that we track it and colorize it based on how the stocks are trading in a short-term gain by percentage, a long-term percentage gain. We track the average true range so that individual members of the community know the volatility of the stock. We talk about whether the candle yesterday was a big green candle, and obviously the price of the stock and the net change. So let's just talk about that for a second. I'm providing all of this in the boot camp. This is the first thing I give to our community at the end of the day. I'm walking based on how the algorithm is pulling the stocks out, based on tracking the order flow, based on reading the tape. We're looking at long-term, short-term, yesterday's net gain, and the color of the candle. So if you think about what I just gave you, the first thing I'm doing is those are the raw numbers of all of the stocks that meet criteria that are strong right now. It means percentage gains over short-term, long-term, yesterday net change, as well as the candle was big green. Think about that. What is that immediately telling you? There's relative strength. There's relative strength in that list of stocks in the long term and short term. So those stocks meet the stringent criteria right now and give us clues to what's going on in the big picture. So when I show you this list every day, this list is giving you the bigger picture without breaking it down into smaller chunks of industry groups, because then the next step is going into those industry groups. But when I give this to the community every day, there's several different ways of looking at this, okay? So obviously, as we want to see the percentage of these stocks and how they're broken down, but we want to take it a step further. We want to go in here and, first of all, actually, this is a big deal, and this is an important thing. How many stocks are in the list? Out of the strict criteria over those time frames, this is more of a taking a temperature of the market. I might not necessarily be trading all these stocks, but I'm taking the temperature of how many stocks right now meet the perfect criteria. Because you remember what we talk about, you have to start with perfect, and then you work your way away from perfect. So if this stock had 4, I'd be like, wow, there's nothing going on. I need to get really picky. Right now, this list has over 30. So I'm like, all right, there's a lot more going on in the market right now. And again, this is a super bonus I'm giving today because this is literally the list that met the criteria from yesterday. But now here's where it kind of gets a little bit deeper. These are the things that, again, we talk about these in the boot camp. I can't go into how I come up with all this, but I want you to understand. I want to challenge you to think bigger. I want to challenge you to think, wow, there's something missing that I'm not doing it this deep. Watch this. So now the next part is we start to work the list, and now we go a little bit deeper into the sectors and find the leading stocks in the leading sectors. So we'll click over here, and now we want to sort this by sector. And now think about what we're doing here. We're immediately going into where is the smart money hiding? Think about everything that we do. And by the way, I hope I'm providing value for you. If we do, please do me a favor, click down and smash that like button and hit subscribe. It would mean a lot to me. So now we're diving a little bit deeper. In one click of a button, we are now going deeper into the sectors. Number one, to find the leading stocks that meet the strict criteria. And here's the thing, which sectors has smart money attention? Think about that for a second. So if we look at this list right now, without even necessarily looking at the stocks, now we're going sector, which is a little bit deeper than looking here. Look at how much technology is in here. Financials are in here. Communication services is in here. That's awesome. Now we take it a step further. Now we start to do the same thing and say, where are we seeing a bunch of stocks that meet the perfect criteria? Solar stocks have actually been heating up a little bit, right? I'm trying to think of the right words. Just type yes if that's opening up some eyes for you. Just type yes very quickly if this is just making you think about how trading works in just a little bit different way, where maybe you're running scans, maybe you're maybe you're doing a good job and you have it all set up and you think you're going into the day. Think about what we talked about with Matt at the beginning of the call and being patient on the open. And all of that stems from being prepared. This is being prepared. So we looked at this, we looked at the strict criteria. Then we found how many stocks met that criteria. Okay, pretty good. Then we broke it down to which sectors have stocks that meet that criteria? Which sector has the most? Then we break it down to individual industry groups within those stronger stocks. That's just the raw list. I'm not even trading all of these stocks. I'm getting a feel, picking up the hood and saying what's going on under the hood. Then I break it down and I put all of those stocks, and I can't give you that list, but actually, you know what? I will show you yesterday's list. How about that? Because I don't want to give the exact list of what I talk about in the community, because that wouldn't be fair to everybody in the community. So then I break that bigger list down into something like this. So if you want to take a quick snapshot, you can see this is Tuesday. So you can see I provide the list for everybody in the community. Then I do the sector breakdown. Then I give you the exact stocks, which may or may not be in this list. And then I do a video explaining all of the stocks that did make it into the game plan. This is game-changing stuff, isn't it? This is what separates somebody who knows everything about chart reading from somebody who is putting the pieces together and saying, I have so much conviction when the market opens today or this week, because all I'm doing is tracking the smart money, as opposed to guessing when a stock that's going straight down is going to bottom out. I am just looking for where the smart money, the deep pockets, are working orders, where they have their attention, and that's where I'm going to start to put my attention. When you scale that up a step further, you say, well, how long has the smart money been watching this stock? Is it 1 day? Is it 2 days? Is it 2 weeks? Is it 2 months? Did I see multiple pushes and pauses? Wow, they're in deep. I should start paying attention. Or is it the first time? That's real trading, and that's why I'm excited to be sharing this with you every day. I really hope you join me every day, because these are the kind of things that separate you from somebody who's still sleeping at 8 o'clock in the morning versus you woke up early and you're here with me. One person had asked about fuel cell. I just want to make sure we take a quick look at fuel cell, FCEO, and give a little bit of a quick, let me just pull that stock up for you. All right, looks like it's you know what? This is actually a good conversation. It did nothing for a while, but what I'd be doing now is I'd be looking deeper in here to see if order flow is stepping up in here. I actually think it's okay. I think it just started to break this longer-term downtrend. The fact that it went sideways for a couple of months, I think it's okay. I think it's okay. So, did I help you today? Did I wake you up to something else different? Did I give the market a little different angle for you? Did I wake you up and say, wow, I'm not going deep enough? Maybe I need to spend an extra half an hour looking at all this stuff. This is what separates somebody who dabbles in the market for somebody who's like, yeah, I expect to make money every day because I'm putting in the work and I know what the heck I'm looking at. Doesn't mean I will make money every day, but it means I expect to make money if the market unfolds in a way that I planned out. All right. I hope that was awesome for you, because I was actually pretty excited. It came from a question that we had last night. If that was valuable to you, please do me a favor. All I'm asking is just smash that like button and click subscribe. It would mean everything to me. I have to head out. We have to head into the gameplay meeting with the rest of the community in the boot camp. So have an awesome day. Thank you so much for joining me. I really appreciate it. And I hope it gave you some extra ideas today. So Netflix last night, we looked at that. Tesla, actually, I think it still looks pretty good. We'll see how the numbers unfold today. Have an awesome day, everybody. I'll speak to you soon. Thanks so much.